We ran out of time in our LOI and we extended it, but only after we got in touch with you guys. He did say, look, we can't get this thing inked pretty quick, 3 or 4 weeks. He actually did put it back on because we went past the time and got a cash offer higher than ours, but still
Oh,
sold it to us because we were down the path here. So
well, hopefully people start listening because you can't blame a seller for getting nervous, right? Because they don't understand lending just like a lot of the buyers don't. They think if they don't qualify or I have to do this again, I'm gonna have to wait
right.
another 3, 4, or 5 weeks to get an approval. So yeah,
Yep.
you kind of get one shot.
Welcome to the Before You Buy or Sell a Business podcast, where we help buyers and sellers learn more about the acquisition process, discuss recent transactions, and stay up to date on the latest news in the market. Here's your host, Jared Johnson.
All right, so today I've got Erik on the show. Erik, you were a previous client of mine, and I'm really excited to have you on. I know we've got some good things to talk about. So how you doing today?
Doing good, man. Thanks for inviting me on. I appreciate it.
Awesome. Yeah. So maybe we can just kind of first start with your background. We'll definitely get into your transaction, but I always feel like it's a good idea to kind of understand, maybe what you did previous to buying a business.
Yeah, so it's an interesting story. I actually am still doing it. So I spent about 4 or 5 years in my early career in financial services out in San Francisco, and then I lucked into a job with Salesforce, and I was a Salesforce consultant at Salesforce for about 4.5 years, and then left Salesforce to start or co-found a small business that does Salesforce implementation work. So that company is about 30 people strong. It's headquartered in Austin. I am still the COO there, and really am sort of a consultant at heart. And so, about 3 years ago or so, I had an interesting conversation with my co-founding business partners, and I had thought at some point they may, he's 10 years my senior, so I thought at some point he may want to, sort of move on to the next phase of his career or exit or do something along those lines. And he really surprised me and announced that he's not interested in doing that at all. And so I just let him know that I was going to go out and look at getting involved with other businesses as long as they were not competitive. And he's fully aware of all the work we're doing. So I went out and started looking around to potentially buy a business.
Cool. So in your kind of normal day-to-day operation now, what do you do?
So I'm the COO at the Salesforce firm, but I am sort of the escalation guy, right? We've got a group of salespeople. If they need me involved, then I'll get involved. And then we've got a delivery team that does all the consulting and billable delivery work. And if they need me involved, then I get involved. And so it's a partial involvement over there. And so I thought in stepping into this new adventure, I'd be able to do, a kind of a 50-50 type role between, where I am now with the Salesforce firm and then potentially what I was stepping into. That has not exactly played out like I thought it was going to, but we can talk about that too.
Yeah, I'm sure that'll be something we would like to get into, and I appreciate you talking about the the good and the bad. But
Yep,
so,
for sure.
all right. So when you decided this was kind of a route you were going to take, what did you do to kind of move forward with that?
I kind of found my way into it by way of Twitter was a very actually it was actually Instagram to begin with, and it was Cody Sanchez and her brilliant marketing mind, right, and sort of got involved over there, followed her onto Twitter, and then I found the Twitter contingent of small business and ETA people, and there's a difference between what Cody is doing and what the small business side is doing for sure. And so I ended up, kind of interacting with Clint Fiore and a handful of others and sort of started asking questions and doing Zoom calls and all that kind of good stuff. And I figured out what I wanted to go do. And there was always a debate as to whether or not I was going to want to go do this alone or with a partner. And so I actually set out to find a partner, and I lucked into finding a guy who I've worked with before and have been friends with for 15 years. So that was sort of the first thing is, how am I going to pull this off while still staying at the existing firm, not being able to be full-time? And that I addressed that by grabbing a partner for this venture.
So looking back on how you kind of got into this space and whether it was, big responsibility or a big, undertaking from the start, and you learned from Cody Sanchez or, Twitter and all that.
Yep.
Do you recommend that people kind of dive into it that way?
I think I'm a little bit older, or I am a little bit older than the typical small business ETA, post MBA, searcher kind of deal.
Hmm.
I think I had a unique advantage in that I had sort of already run a company for 15 years, right? So I think, I felt really comfortable and really, confident that I could step in and do a lot of that operational work and the sales work and all the things that were, people work, all that good stuff that was going to be required. Um, I think certainly the right personalities can. If you've got, if you've got enough experience running companies, hiring, firing, training, supporting, coaching, mentoring, and those types of things, sure, absolutely. But there is a lot of that is needed and required as you step into a role to sort of lead and be kind of a people manager. So.
Yeah, thanks for saying that. I think we'll probably dive into that a little more in a minute. But
Sure.
so the actual business that you ended up acquiring, how did you find that one?
So when Sam and my partner, decided to go into business, the thesis, so to speak, was that we needed to be able to run the company remotely. So it needed to be something that we could, really at one point we were saying we need to be able to run it from Spain, right? So we need to be able to be internationally, in charge of something and be able to be successful. That was kind of a joke, but the first thing we defined was it needs to be remote, right? So really that cuts out a lot of, sort of lots of the boring home services type businesses, which is, was disappointing, although those are getting so competitive. The pricing on those is hard to compete, right? But so when we started looking at it, we found there were marketing services, there were staffing services, there were consulting services, and we just lucked into this one. It was actually on Transworld. And it was listed, and it was a remote business, and it was consulting. So I've got 25 years now of consulting experience, and so we were very interested in checking that out. Plus, it has its own little product that is also potentially going to be a very interesting revenue stream down the road. And when we found it, it was listed. We got on a few calls with the broker. We fairly quickly got in touch with the seller and had a conversation, and it was really interesting. So.
How many deals did you look at, do you think, if you had to guess, before you found this one?
Look at? Ooh, it was probably 6 months worth of looking. So we found it fairly early on, but we looked at, I don't know, less than 100, probably more than 60. And so we looked at a bunch, talked to a bunch of brokers, did a ton of outbound broker communication. So we had written our letter and said, here's who we are and here's what we're trying to do. And we'd gone out and done sort of a broadcast email, and we'd done lots of, call down and things like that to get in front of the brokers. I was well aware of the, sort of proprietary search option, but I don't think I had the time to do that. And so we really focused on brokerage. And that really ended up being the right thing to do. So we ended up probably getting serious about 6 or 7 projects. We submitted 3 LOIs, and on this third one, this is the one that hit.
Yeah, it's a good breakdown. A lot of people get kind of stuck on, and a big question I get often is, how long does it usually take to find a business? And it's a difficult question to answer because everyone can be a little different. I think a lot of it depends on how specific of a business you're looking for, geographic, all that kind of fun stuff. So, appreciate you giving a little context there for people that are kind of wondering how long it takes and everything. So, so looking back, the way that you went about it, do you feel like that was the right approach?
I think it is definitely, to me, I think you should start there, right? One of the other things I didn't mention was that before I really got serious about my search, I ended up running into somebody who I was talking to about buying businesses, and he said, "Hey, listen, I've got a business. Do you want to try to buy it?" And that's not exactly how it went down, but I think you get the point. And it was really, really hard to get to a point with that person that was, reasonable about price and all that kind of good stuff. So I thought going with the broker search was going to be a lot easier. We certainly were going to be, we'd already cut to the chase in terms of value of the business and all that kind of good thing. So I thought that was a place we'd really like to stay. And talking to people who are ready to sell obviously is certainly easier. We got lucky though. I mean, 6 months is not unheard of, but it's a short duration for sure. And we were pretty picky. We wanted something that was over $750,000 in EBITDA or SDE. And we really wanted it to be run remotely. We wanted B2B services. There was a set of criteria that we were looking for in it, but we were looking kind of nationwide, and so that helped. On the other hand, there were not a lot of businesses that were 750 and over that were attractive in our thesis.
Yeah, it tends to be. I think like every every kind of category has its challenges, right? Where
Sure.
some of the really small deals, maybe they don't have good financials, or you can't get a good grasp of how the business is doing, and then the higher end, the multiples can be just way outside the box where it doesn't make sense and you can't make money. So yeah, it's always a challenge, but 6 months isn't too bad. Obviously that worked out. So the type of business that you ended up actually moving forward with, I think you kind of mentioned it, but maybe you could expand a little bit further. What were the major things right off the bat that you looked at that you liked about it?
The business was making 1.3 million in EBITDA, 1.5 in SDE, and it was only selling or revenue was right at 2 million. So that's a 72% margin. So that was obviously very attractive. We knew that wouldn't last, and one of the reasons that it was so attractive is that the owner seller was really doing a ton of the delivery work, and we knew that was not going to happen. So, and he really didn't have that much infrastructure in there either in terms of staff that were, supporting the business and those types of things. He was a one-man show. So we knew getting in that we were going to drop the margins, but that also meant we had, a lot of margin to be able to use to, build out the infrastructure and the operations. And so, when we got in, we found that was obviously very, very, very attractive. And we knew that we could, even sort of taking and modeling out the P&L, we could insert a certain set of staff and drop the margins and still, more than cover the debt service and, achieve what we wanted to in that first year, which we thought was an easy thing to do. And there's been some interesting bumps that we could talk about for sure.
Cool. Yeah, I'm excited to get to that point. But so once you decided that was most likely, kind of really what you wanted, you'd sent out your LOI. And then from that point, did you start immediately negotiating? Did you start your due diligence? What'd you do after that, after they accepted the LOI?
One of the things that I'll do a plug here for Sam Rosati and the guys at the SMB boot camp and Pursuant Capital. I went to that boot camp and they basically gave us all the templates you could ever possibly want to use during pretty much every step of the process. And I used an LOI from them. We ended up doing 9 revisions of that LOI with the seller. And so by the time we got to the end of it, we had pretty much negotiated the key parts of the deal. I mean, we couldn't have closed with an LOI, but it was fairly well negotiated. I mean, we had, provisions for networking capital. We had, the non-compete. We had, a ton of different stuff, including, trying to talk to some of the key people that are in the firm, kind of laced up and buttoned up. So by the time we got there, we had actually done a degree of due diligence. They didn't turn over everything, but they turned over some things before LOI. And then, of course, by the time we got going, I think it took us a month or so to get through the LOI revisions. And so by that time, I'd already talked to the service providers that we were going to use, and we were pretty much ready to rock and roll. So it got inked, and we jumped right in and did. We didn't really have to do an entire QOE, but we did do an audited set of financials. And network and capital, verification and those types of things. They did a proof of cash. The business is super simple in terms of how it bills. We get a contract, send an invoice, that invoice gets paid. That's it, right? It's a very no inventory, simple stuff. So we got that going pretty quickly. We hired attorney, and they went through and did some of the due diligence in the contracts. So one of the huge values, this is there's large government contracts and there's large private sector industry enterprise business too. The overwhelming majority of the business is actually in the government contracts. And so those government contracts go with the company. So we had to do a stock sale. Mm-hmm. As the result of that, we had to really diligence those contracts because it's things like, federal GSA schedules and contract vehicles that are required to do business in certain states. And there's like 10 contracts there. Without those contracts, you can't really do business in the government sectors in those states. And so it was hugely important. Getting those is a challenge. There's cost associated with them, and maintaining them was going to be very important. So we did a ton of transfer due diligence if that was going to work, if that was going to be okay. And same thing with the customer contracts that were in place that had, I think we had 16 months on one of them and something like 9 months on another one that was worth about 2.1 in future, or what they call backlog revenue.
Yeah, that's always good to hear. I kind of try to harp on people on the front end. You get a lot of searchers that just kind of shotgun LOIs out, right? Or they find something that they like and they're like, here's a 2-page LOI. Hearing that there was 9 revisions, I'm sure you'd probably agree, but that definitely, kind of creates conversation. It creates due diligence. It creates, thought processes, and you're getting the seller to really understand they're selling the business. You're hitting on a lot of the major points that are likely to come up in a contract. And oftentimes what I see when someone sends out a 1 or 2-page LOI is, okay, you've got an LOI. Now you're moving forward and there's, 30, 40 things that need to be discussed. And if you're going forward and you're spending money on due diligence, you're spending time and energy on all of these things. And then you bring up one of those key items and the seller says, absolutely not. Well, you just wasted all this time. So I'm glad to see you did it the right way by having the 9 revisions, which isn't fun, but at least you got to that point quickly. Yeah.
Yeah. And one thing we did include in our LOI is, because we knew we were going to have to do a stock sale transaction, we needed to also do the F reorg or 336E. I can't remember which one we did, but it all depends on whether it's a C Corp going to S Corp or the other way around type deal. We had to do that tax treatment here in order to get the cost basis for ourselves. And so that requires that the seller and his CPA do some work. And so if you're going to have that happen, you're going to have that happen, you may as well agree to it up front so that there's no surprise. And that's exactly right. We thought about anything that could be a snag down the road, and we put it in the LOI. And I think we did a pretty darn good job of including really everything. I don't think there was any surprise. We put a range in for net working capital. He agreed to the high end of it. I mean, it was just really altogether, it was a good prep exercise for sure.
Yeah, that's great. It's great. So, okay, so you got to that point, got the LOI signed, you agreed on a good chunk of everything that you're going to need to discuss. Then what'd you do?
The broker had gone out and talked to a BDO that was at one of the large, SBA banks that you hear about all the time. And the BDO had SBA pre-approved the deal, which we all know is sort of just a nod, right? And at the end of the day, that BDO really just could not understand this business. And so we got a fairly quick term sheet, but we couldn't get a commitment letter. And quite honestly, the BDO would call us and go, so let me make sure I understand. This business does, blah, blah, blah. And he'd kind of give us the story and you're like, that's not it, right? And it's really not a tough business. But for some reason, I didn't think we were going to get a very fair representation at the commitment letter table, so to speak, that, I don't think we were being well represented there. And so we really got hung up in bank financing big time. Rounds and rounds and rounds and rounds, 2 or 3 different, business plans, a bunch of different sort of phone calls. They finally got to a point, we had done the quasi QB and given it to them, which, showed everything was exactly as the finances say it was. And finally, the approval team kind of came back and said, we need fully audited financials. And so we said, tell me what that looks like if we were to do that, right? And it was essentially, you need fully audited financials, and you need somebody to, sign their name on the, kind of dotted line that says we've gone back and done, assurance of all previous, financials for the business. And it was going to be a hefty investment, right? And I think it seemed like at that time that they were just too unsure of the business, because they didn't quite understand it, that they were throwing in something that made it sound like it was, understandable, but it was very expensive. And so we just said, it's not going to work. And so we tried round and round and round, because first experience trying to get, lending done here, and didn't know exactly what to expect. It ended up taking, we got under LOI in April. And then when did we start working with you? Was it?
I want to say it was
August.
I feel like it was August. Yeah. Yeah. Because I think Ryan
August.
Smith introduced you, and
Yep. That's right. Exactly.
Yeah. So I remember him contacting me and kind of going, this is what's going on. And
well, the broker, the seller's broker, found Ryan and said, let's go with this guy. I think he's got a pretty good head on his shoulders. Let's go figure this out. And we very quickly got introduced to you guys. So the good news is everything was buttoned up. I think, we basically uploaded everything you needed in like 2 days. We had it all, which was great. And it was a great deal, and it was a great company, and everything was just, it was going to happen. It was just a matter of finding the right lender. And so other than that, trying to think, we had great providers, great service providers as we went through it. I'd absolutely do it again. And, with the financial service provider, we went forward with them, and they're actually managing our books now as well. So,
oh, cool.
Good stuff.
Yeah, that's great. Yeah. So, you kind of brought up a good point, and something that I continue to harp on is, when you're moving forward to the transaction, I feel like oftentimes you really only get one chance at working with a lender. Fortunately, you were able to kind of quickly pivot, and we were able to make up some time there.
Big time. But
a lot of times what happens is buyer will go with either somebody that the selling agent recommends, or maybe somebody they found on Twitter, and had one the other day. They told me they lived in their neighborhood, and I'm like, no. So, it's like you get one chance, right? You move forward with that person. Unless they tell you no right away, you can get really drugged down this hole, and then trying to pivot and come back to a different lender. A lot of times the seller is like, I'm done. I don't want to start another 4-week process, and so on and so forth. So I tell people all the time, if you're going to go with a lender, they should be able to tell you really quickly, yes or no. But even then, just kind of really dig in with them. How many of these transactions do you do a year? How many have you done? Do you represent this type of industry, in the business acquisition ETA space? Is this what you're doing primarily, right? And you get a lot of people that are just shopping for rate, or shopping for, some kind of, savings a little bit here and there, and they end up just blowing up their whole deal to save, a quarter point on a rate. And it's frustrating for me, because I genuinely care about people buying and selling businesses. And so when somebody comes along and says, well, this other, lender offered this crazy rate, I usually tell them, if you can get it, take it. I totally would. But here's what's happening a lot. It's taken 4 to 6 weeks, and then you're going to come back to me. And then you expect me to stop working on the other 50 transactions I have to work on yours to speed up and get it done. Like, you should trust me up front. But unfortunately, I kind of get it. There's not a lot of transparency, and it's not something like mortgage where there's, a lot of people in the industry doing it, where it's all kind of the same. in our world, it's pretty small. And the people that are doing the transactions actually getting it done is a very small handful. And so you can get lost trying to work with someone else if you don't know that. And so, yeah, unfortunately it happens, but fortunately for you, you were able to keep the transaction on the tracks and still get it done. So
to your point, the seller did give us a bit of a kind of an ultimatum, but totally understandable. I mean, he's trying to sell this thing too, and we drug him through the financing, exercise for 3 or 4 months, and he finally was like, "Guys, I mean, we ran out of time in our LOI, 90-day LOI." And we extended it, but only after we got in touch with you guys. He did say, "Look, if we can't get this thing inked pretty quick, 3 or 4 weeks, I'm going to put it back on and see if I can get another offer." He actually did put it back on because we went past the time and got a cash offer higher than ours, but still sold it to us because we were down the path here. So
yeah, so
it was worrisome for sure.
Yeah, well, hopefully people start listening because
Yeah.
you can't blame a seller for getting nervous, right? I mean, somebody comes back to you and goes, "Hey, I need to switch and go to a different lender now." In their mind, it's these people don't qualify, right? Because they don't understand lending just like a lot of the buyers don't. They think if they don't qualify, or I have to do this again, I'm gonna have to wait another 3, 4, or 5 weeks to get an approval. And so, yeah, you kind of get one shot, and it's better to just go with someone that is going to get it done and ask the right questions up front. So either way, we were able to get it, and we were really happy to kind of meet you and talk with you. It was nice working with you as well because you understood what we needed. You understood what the business did. Had a lot of really good experience. Our conversations were very straightforward and to the point. And I can usually tell when I'm talking to somebody if I'm going to be comfortable with them and if I feel like they're going to be able to run this type of business. And with you guys, it was like right away. So I'm like, okay, yeah, we'll get this in. Let's get this moving. So we
totally. Yeah,
glad
your
it
team
came
was
together.
awesome. Yeah,
Cool.
your team was great. I mean, just going back and forth in those last few days, which the snag for us was going to end up being insurance. I don't know if you remember this, but I was trying to get our insurance coverage. We thought that it was going to transfer too because of a stock transaction. We should be able to just take over those insurance policies. Not the case. And 1 week before, we had to get all of the insurance moved over and all that kind of good stuff. And I was literally on the phone until like 9 p.m. the night before we closed at the end of September. So that's one thing that I would point out to people: get your insurance squared away.
Yeah, I completely agree. There's usually a list. My assistant Stacy's awesome, and she usually will put together a full list of these are the things that you need to work on now up front. Yep. And the people that listen to that, if there is any issues like that, then we can usually get them to come to the surface right away and start attacking them rather than waiting until the end. So yeah, there's a lot of things that you have to work on with SBA lending, and the sooner you start, the better. So. I believe the purchase price that you guys transacted at was $4 million. Did a seller carry for, I think it was about 5%? Does that sound right? Okay. Yep. What were the terms on the seller carry?
So it ended up being 5%, 3 years at 5%.
Okay.
So it was a pretty quick one, and it was just simultaneously. So we put lots of cash down, which I think was helpful also. My business partner and I split the equity down payment, and then there's a 5% seller note.
Yeah, and then we included, I think about $220 or something in working capital for you.
$225. So. Yep.
Cool.
Exactly.
Yeah, so pretty good, kind of normal transaction. Seemed to make sense for you. So. If you could give like any kind of advice as far as like due diligence, is there anything that you wish you would have done differently now that you've taken over the business? Maybe let us know there. Yeah,
I mean, the big surprise for us, our kind of J curve or fetal position moment, right, was we ended up with a couple contracts that had, like I mentioned earlier, $2.2 million in backlog, which is what we were counting on to basically run the business, get things up and running, establish ourselves in the operations of the business, and then bring on additional contracts. We ended up losing a contract. It went on pause, so we didn't actually get it canceled, but it went on pause because of a very strange budgetary thing that happened in California that's never happened before. So all these things that we didn't expect. One of the reasons why we really loved this business was because these government contracts are indestructible. I mean, you get in, you get started, and they run their course. Nobody comes back and says, you're fired and you're done. I mean, that just doesn't happen because of the way they fund these contracts. So when this happened in January, it taught me that we should have built in some seller note forgiveness or some sort of way to go back and say, this contract, paused, fell apart, or whatever, and we should be able to recoup that in our seller note. But during all of this, so basically that's the number one thing I would have probably done more. On the other hand, we talked to the seller about it, and he said I wouldn't have done it anyway. So don't know that we would have gone forward with it though. It's that's a pretty big risk. And so, I know I've already made a couple panic phone calls to you going, hey, what happens if, and all that kind of thing. We're now way back on track completely, got a great new giant contract, and we're rocking and rolling. I think we'll be fine. But so that part would be a pretty key part of it, is sort of forgivable seller note based on the risks, right? The customer concentration in this particular business is the state of California, not just the various different agencies. So if California has budgetary problems, the company is at risk. And California had budgetary problems. And so that's a customer concentration issue I'm not sure I could have even understood at this point, or at that point. Now I can. I'm super happy that we did the working capital cash rather than a line of credit. That ended up being a big deal for us. And we actually had some problems getting some parts of the contracts transferred over after the transaction. And the state of California didn't pay us for 3 months. And we ran through basically all of that cash paying our people, and ended up getting all of that money recouped, but it was about 90 days late. So thank you for that.
Yeah, no, that's something that I think a lot of people push back on. It kind of goes both ways. Some where they're like, no, I need more working capital. And then some that are like, I don't want to borrow anymore. And I try really hard to tell them, like, call me in 6 months. If you still feel that way, then pay it down. Most likely you're going to call me and say thank you. And it's just from doing so many transactions, you see, and that's almost always what it is, that whatever vendor they're waiting on, for some reason there'll be a snag and they're waiting to get paid. And I tell people, like, I'd rather you call me and say, I want to make a principal reduction payment, than call me and say, I can't make payroll. Because you can't make payroll, you lose your employees, you're in big trouble. So
100%.
Yeah, it's always good to get as much working capital as you can. And then with the line, some business models, it really makes sense to have the line, and then some it makes sense to have the permanent. Oftentimes we'll do both. And then that way you've got kind of some that you are paying interest on right away, and then some that you don't need to. So either way, yeah, having working capital, I kind of always feel like you can never have too much working capital, especially in the first 6 months or so. There's always speed bumps that you didn't know were going to pop up. So totally, yeah, it's some great advice.
Yeah,
so.
You were right.
I'll take it. Yeah, and then with the forgivable seller note, that's another thing that fortunately we're starting to see a lot more of, and the sellers are kind of warming up to it as being sort of the norm now. Something that changed in November of 23 with the SBA standard operating procedures was they actually went in and kind of identified that would be okay. Historically, we would do it, but it was almost like a little bit of a gray area where they hadn't completely said that's okay to do. Now it's actually written in there that it's okay. So the more where we have somebody, especially with a concentration or something that you're looking at, if it changed even a little bit, or it would cause like a drastic change within the business, then that's something that more and more people are trying to, kind of alleviate by using the forgivable note. So Yeah, I
Yep.
think, but as you mentioned, the seller has to be on board with it. So
Hmm.
if you would have brought it up and he said no, then you kind of would have been at a point where you said, "Do I still want to move forward?" But fortunately, kept your head down, kept working. Having the working capital helps, but then also, I feel like a big point of something that we need to make is that you have really good experience as well.
Hmm.
So
Hmm.
that's another thing that a lot of times you see people that are trying to buy a business, and they don't have a ton of experience. And this is the reason that the bank is harping on the experience, because stuff
Hmm.
can go wrong. And if you've dealt with it before, or you've got somebody real close in your circle that you can go to and say, "Hey, how did you handle this?"
Hmm.
There's going to be a much better outcome there than if you didn't. So
For
that's
sure.
great.
Yeah, absolutely. Yep, it's bumpy. I mean, the best case scenario with a bunch of recurring revenue is awesome. This is not one of those businesses. This is a big project based business. I mean, we close 250 to $2 million projects that pay for a year to the next 4 years, kind of thing. So they're fantastic if you can get them closed, but it's not easy to get them closed. However, we got lucky, and we're ready to roll for the next year and a half now without any concerns. And I think we're going to be in really good shape here. You do have to be used to the project-based revenue, though, and knowing sort of what you need to be stable versus what you can do to allocate capital towards new ideas or hire people or whatever it is. So those are good things to have already had experience with, for sure.
Awesome. Yeah. So when you had made the decision to kind of start looking for something else, but retain your, normal gig that you've had for a while now, kind of what's next now that you've sort of accomplished what you set out to do so far?
Well, I mean, at this point, we're definitely just sort of hoping to maintain stability. At this point, we're chasing after a handful of other projects that believe that we're going to hear good news at some point in the next 2 to 3 weeks. Um, and if we can continue to do this sort of once every quarter, once every 2.5 months kind of clip, we should be in pretty good shape here. So stability first, and then secondarily, we'd look at potentially either opening up another line of potential revenue for the business, making an investment in that product I mentioned earlier, or potentially talking to other businesses about partnering or acquiring as well. There's already a couple different conversations like that going on with other sort of small businesses in various different states that are they're good complement to this business. So could be a roll up, could be a acquisition of some sort. Who knows?
Yeah. Well, either way, it's exciting.
For
You've
sure.
gotten some of the tough times behind you, so it's time to start really looking forward. So it's great.
Exactly.
Yeah. So, your deal had some ups and downs, a couple hiccups here and there, but you got it done, and you kind of learned a lot, so you'd be ready for the next one. So I appreciate
Right.
you coming on and answering the questions. I always have two questions at the end. So first one is, do you have a mentor, or have you ever had a mentor?
Yes, and yes. It's an interesting thing because you've heard it before. Like, people don't like to be called mentor necessarily, but I've got a handful of people, all of which are at least 5, if not 15 years my senior, that I have worked with in various different capacities. In fact, some of these people are customers, and quite honestly, we got lucky as anything with our seller. He is basically being a mentor to us in this category of businesses, which we weren't super well versed in. So we still can give him a call and say, hey, what's the angle here? Is it better to do this way versus this way? And he'll sort of help us. So I think it's huge. You really should have it. I definitely have. And I also recommend sort of peer groups for that same kind of thing. We're doing the work with Tensi and Chris Munn and those guys, and it's been great too.
Awesome. Yeah. Sometimes you don't even realize that, you have a mentor, or that you're mentoring someone else. So,
Yeah,
yeah, that's always
for
great.
sure.
I'm glad you recognize that. So Final question, what motivates you? You're obviously successful. You've done really well. You've been able to push through some difficult times. What keeps you going?
Man, sometimes I don't know the answer to that. At my age, I think I never had, private equity or investment banking background necessarily. I've always been a consultant, and I honestly didn't know much about investment banking and private equity. I didn't know that you could buy cash flow I just figured this stuff out like 3 or 4 years ago. I feel silly saying it, but it's true. And it literally reinvigorated my entire professional career. Like I'm on into doing this even to some degree as a hobby because it's so fun to learn. It's so fun to do. And honestly, I changed it's not super recent, but about 15 years ago, I changed my outlook on whether or not my kids should go on to work for, the man, right? Or should go work for themselves. And I really think it might be interesting to do this for my kids. So it would be very interesting to have them either work with some of the businesses that we have, or it might be interesting for them to go and do the search and have me be the investor, right? So a lot of it is my kids, but a lot of it is just being reinvigorated around this as a new potential hobby.
Yeah, that's awesome. Yeah, it's kind of most likely the motivation changes a little bit over your career and your lifetime, but yeah, sure. It is really fun and it's really interesting. And that was the main reason that I even started the podcast. Was there's a lot of people that don't even know you can buy a business or sell a business, and then there's kind of this whole new world over the last probably 4 or 5 years that have really kind of latched onto it, and then even in the last year, it's really caught on. So it's really cool to see, and it is funny when I explain to people, like, no, you can buy a business or, you can get involved this way. And they're like, what? Like, so yeah, it's really interesting. And I'm glad, that it's happening. And what a cool thing if you can teach your kids, how to do it and everything. So
it's funny, as I got into this, I was looking, my family's been in real estate, for many, many, many years, and I'm invested in some real estate with them and that type of thing. But, when I was looking for a change kind of 2 or 3 years ago, I sort of hit a fork in the road between, do I go with, multifamily, or do I go with real estate as a path to jump into, or do I go with, buying businesses? And it was pretty clear to me that since I had the business acumen already, I was like, it's this. And so I went headlong into buying a business. So
cool.
It's fun. Yeah.
Yeah. Well, hopefully we'll chat soon again, and you'll be
definitely
out looking for something else, or finding a way to expand your existing businesses. So I really appreciate you coming on. There's a lot of advice and wisdom, and I'm sure a lot of people will be happy to listen.
Excellent. Yeah, great. I would definitely recommend you guys for sure. So,
well, thank you.
Thank you for listening. We hope you found this podcast informative and helpful. Please don't forget to subscribe on your favorite podcast player. For more information, or if you'd like to discuss a transaction, please go to www.jaredwjohnson.com.